Hi, everybody. I think we'll get started now. And so thank you, everybody, for joining us tonight. We have a very exciting and great lineup for you this evening. We have a special guest, Richaard from Wealth Enjoy, and he's here to teach us more about technical investing and technical analysis, which is obviously very important at this time with the markets being so volatile, etc. I'm sure many of you will want to know more about these tools and ways in which to help you identify which stocks to buy, and also very importantly, when to buy these stocks. So first of all, we'd like to do a very quick introduction of Syfe for those of you who are not as familiar with us. So Syfe is a Singapore headquartered and MAS licensed digital investment platform. At Syfe, we use technology-driven solutions to build institutional level investment products available for retail customers in the most affordable and accessible ways. We also now have two main products. We have Syfe Wealth, which is what we started with, which offers essentially a more hands-off approach if you want smart portfolios available for a passive investment, and if you want more interested in sort of long-term wealth building with, again, that more passive approach. However, more recently, we've launched Syfe Trade, and that caters to investors who are looking for a more active way to manage your money with a securities brokerage platform. And that's what we'll be focusing more on today when we talk about this technical analysis piece. So one big question could be, what is generally technical analysis? What are some of the other ways that people invest in stocks and analyze both stocks and businesses? So there are two main ways, and that's fundamental versus technical. The most, I guess, maybe famous one, made famous by the very popular Warren Buffett here, is essentially fundamental investing. And that essentially looks at the health of this businesses and companies that underlies the stocks that we see listed on the exchanges. And so focuses on things like the health of their balance sheets, their revenues, their future outlook and growth. Are they gaining market share, etc. And then looks at things, combines that with metrics which essentially values those business attributes, such as multiples of their revenues, multiples of their earnings, or essentially multiples of their book value, and how much are you paying for that business or that growth outlook. Then there's the technical analysis side, which Richaard here will talk much more to, but is essentially, I guess, to put in three words, charts, and more looks at historical price movements and volume movements to identify future trends. There is, however, some common principles of both fundamental and technical analysis. These are essentially that securities can be mispriced at times. There are trends and counter trends, and lastly, history does repeat itself and patterns do reoccur. On that note, I'm going to hand over to Richaard, who will take you through in much more detail around the technical analysis part. So Richaard, as a brief introduction, so he's the co-founder of wealthenjoy.com. He is an avid retail investor. He is a student of the markets and manages many online investor communities, such as OnlineTradersClub.org, YieldSavvy.com, and SingaporeQuantClub, as you can see on the slide in front of us. Over to you, Richaard.
All right. First of all, a very warm welcome to everyone, and thanks for attending it live today. And it's my pleasure and privilege to be invited by Syfe to share a little bit about the simple technical analysis and how it can be used for long-term stock investing. Now, it is not the only way to do long-term stock investing, but I believe it's a simple way that I feel that we can share within this short 1 hour that can give you some ideas on where and how to get started. All right. So thanks, Sam, for the introduction. So I'll just skip these two slides. So well, you can pause the video if you want to know who I am. So I managed, like what Sam says, I'm a co-founder of Wealth and Joy, and we do share some market insights, education, and opportunities with our community within our Telegram channel. So if you'd like to follow what I do, please search for Wealth and Joy in Telegram and join the Telegram channel. Okay, and a very important slide. So I'll read every word of it. So this webinar is intended solely to provide general information only and is not an offer to sell to anyone or a solicitation from any persons of an offer to buy any securities. The information in this webinar is for educational purposes only. It is not intended to be, nor should it be construed as financial advice or investment advice. Before making any investment decisions, you need to consider with your financial advisor your particular investment needs, objectives, and circumstances. And any references to specific securities are meant to illustrate the concepts and of fractionalization, and neither nor to be construed as a recommendation or advice to buy any specific securities. Okay, with that out of the way, let us now get into the topic for tonight. And the topic for tonight is simple technical analysis for long-term stock investing. So it is me sharing my personal experience and knowledge on how to shortlist stock listed in the US and simple ways to analyze the price charts for entries as well as exits, how to build a diversified portfolio, even if a person have a small account, and how to use stocks fractionalization for portfolio diversification. All right, so I will go through fairly quickly. Not to worry, the webinar is being recorded. So if you miss any part or want to revisit any part, feel free to watch a recording after the session. And if you're watching this recording on YouTube, please like, subscribe, and share the video, all right? So the very first step that we need to do is to build a watch list. Now, this is a list of stocks that we want to pay more attention to, and probably build our shopping list from it. Now, as you may know, there are more than 5,000 symbols in the US. Now, we can't be staring at 5,000 symbols every week or every day. So we need to filter the 5,000 stocks to maybe a small handful, perhaps 10, 20, or 30 stocks that we pay more attention to, that we watch over, and that we want to put into our investment portfolio, all right? So how do I build my watch list? Now, the first thing is that I believe that when we want to do long-term stock investing, we want to buy great businesses. So what do I mean by great businesses, right? Perhaps you can ask yourself this question: what do you think that the world can't do without? Right? So, or what are the companies that you're familiar with? Look around your house, look at the products that you use, and perhaps that those chances are the products that you use are from a listed company, right? Or you can look at what the experts are saying. So, such as a Wall Street analyst, they are paid good money to analyze stocks all day in and day out. So what are they looking at? And based on their analysis, that can generate some ideas for you to start your watch list building process. For me, I also like to look at look a little deeper than just what the above questions might suggest. Such as personally, I like companies where their revenue and profits are growing. Okay, so in the past recent years, they are growing, and also that I hope that they have a growth potential even moving into the future. And I would like to consider market leaders. Okay, that means that they have an established market share in the country or in the world, and yet they still have a growth potential. Now that's quite a difficult sweet spot to strike, right? And also, I would like to have businesses that have a strong moat and preferably with a recurring revenue streams, right? So don't you think that if you were to start a business, this would be the kind of business that you want to own? Why not build a portfolio of such businesses? Okay. Now, I've grown to love Syfe Trade, and I use Syfe Trade as one of the tools that I use to build my long-term investment portfolio. And that's one of the reasons is because they make my job of building my watch list easy. All right. So when I log into my Syfe Trade account, okay, of course I block out my numbers, you will find that it's a very simple user interface. And my favorite feature inside there is the discover feature, right? Right at the bottom, you see a red box there. So when you tap on that discover feature, you will see the screen on the right. And my favorite section of that is the market view. Let me share with you why. Okay, because when I tap into market view, Syfe has already compiled into 3 very nice watch lists for me, right? So I don't have to go through 5,000. Each of these watch lists only have 20. So I'll just scroll through them and I'll look at the names and see whether those are the names that I recognize, that I use, for example, or I feel I have came to read about from others that talk about businesses. So these are what are the 3 watch lists that Syfe have compiled for me. Now, the first one is called Wall Street Recommends, the one on the left. There's the list of 20 stocks with the highest potential upside according to top Wall Street analysts. So that's one that the experts are saying that are good. Now, the second watch list that they have compiled for me is a list of 20 stocks that has the best last 12-month winners. And these are the top performing large cap stocks over the last 12 months. And the third watch list is the top earnings momentum stocks. And these are the stocks that have seen turbocharged earnings power over the last 12 months. So very nicely, they have already compiled 3 watch lists for me to start my watch list building process. So each of them, they may have duplicate names. And that's good because that means that the company belongs to multiple categories. So for example, one of my favorite company is NVIDIA. So you can see that it's in the last 12 months winner. And if you see any stocks that you like to add to your watch list, simply tap on the heart, right? You saw that on the screen as well. So when you tap on the heart, you'll be presented with a screen where you can add to your watch list. Now in Syfe Trade, I've created a watch list called long term. That's where I hold some of my holdings. And then I also have created a watch list called market view. So that's where it's like my my jotter book where I note down companies that I feel that I want to dig further. So I will put them into I'll add them to the market view first. So on the right, the screenshot is what the watch list looks like. On the top, you can tap on long term to look at one watch list, or tap on market view to watch at the second watch list. Of course, these names are given by me. You can add more watch lists. You can classify them any way you like. All right. So, and it's conveniently accessible by tapping the watch list icon on the app. Now that I've put a basket of companies into the watch list by tapping on the heart and adding to the my Syfe watch list, how do I buy every one of them? Surely not, right? I don't have unlimited bullets. So what we need to do, or what I do, is that I will need to further filter them. And how I use Syfe Trade to help me further filter them is through their analysis tab, which I will share with you very shortly. Now, when you tap on the company's name in Syfe Trade, you're presented with 3 tabs. The first one is overview, where you can see the stock price. I normally like to look at a 1-year history of the stock price. I like to see a stock price that is smooth up moving with less volatility or less jerky movements on the downside. So what you see here is Microsoft. We all know that company. So, and on the right, you will see the screenshot where they also present to us some of the metrics, some of the key metrics about Microsoft in this case. And I'd like to see more green. So you see that the earnings per share, EPS, is green. That means there's growth. The revenue is green. That means there's growth. So I like to see companies with this kind of health metrics or key metrics. In addition, among these 3 tabs, my favorite is the analysis tab. Now, the analysis tab tells me how many analysts are covering this stock. So in this case, it's Microsoft. We can see that there are more than 35 analysts covering the stock, and 35 of them is saying to buy, not me, because I'm not the expert, right? So I leverage on the experts' analysis to tell me whether to buy, sell, or hold a stock. So of course, when they say buy, doesn't mean I buy immediately. There are still other factors to consider, which I will elaborate a little later. So I usually That's the first area inside the analysis tab that I like to see. The second one is the estimated target price. Now, all these analysts have done their homework and they have came up with their estimates of what the price of the stock should be 1 year from now. So Syfe have compiled it into this line, and I can see where is the current price on the left, and then what's the average price and what's the high price that all these analysts have estimated. So it gives me a very nice bird's eye view of where these analysts think the stock will go 1 year from now. And the third section under the analyst tab is a trend of all these analysts' target price as well as the stock price. All right, so I'll elaborate that. Now, I mentioned that in the overview tab, I like to see green. So if I don't see green, then I will have a less reason to want to choose that stock. So if I see green, EPS 39%, that means the earnings per share have grown by 39% in the financial year ending 2021. The revenue have grown by 17%. That's what it meant. All right. So for Microsoft, so I want to see all green. So if there's any red, then I probably will skip. Now, the second section is from the analysis tab. So like I mentioned earlier, I like to see double-digit numbers of analysts saying to buy the stock. Okay, it doesn't mean, again, it doesn't mean that we buy today, all right? So we are just saying that there are more professionals and experts who are looking at the stock and say that in their opinion, they feel that it's a buy. So in this case, for Microsoft, 35 analysts are saying to buy. And next is the estimated target price. Now, all those analysts and experts have gone through the numbers and came up with a projection of where they think Microsoft price is going to be 12 months from now. So the current price at the time that I took this screenshot, Microsoft was at 310. And in their opinion, they felt on average, they felt that the price should be about $370 1 year from now. So to me, that means that there is a 19% potential upside if I were to buy the stock today. So that is good. So I'm looking for at least a double-digit potential upside whenever I am looking at this aspect, this area of the analysis tab. Now, the third area within the analysis tab is the trend of the target price and versus the actual price. So the target price is in the blue dotted line. I like to see that it is stable or up sloping. So in the case of Microsoft, you can see that it is stable or upward sloping slightly, right? So this means that the analysts with their combined experience felt that Microsoft is worth that much 12 months from now. And they continue to hold that view, even though the actual price of Microsoft have been dropping. Only in the recent few 1-2 months that Microsoft price have increased, right? So that's good to know. So because that tells me that I have a margin of so-called margin of safety when I want to buy the stock, even though it's dropping. Okay, so in summary, what I have just shared with you, I put them into one slide so you can see what I meant. Okay, so this is for Microsoft. Let me share with you another example of a company that I would put on my watch list. So this is the summary for NVIDIA. The symbol is NVDA. So you can see that the 1 year stock price is upward trending quite nicely. You can see that the key metrics are green. The EPS is green. The revenue is green, right? So in double digits for the revenue. So that's really, really nice. Then as for the analyst rating, 31 of them calls it a buy, gave it a buy rating. So that's good. Normally I like to see more, also double digit and preferably more than 20. Okay, so for the estimated target price, these experts and analysts felt that on average, felt that the price of NVIDIA 12 months from now is going to reach $343. At the time that I took a screenshot, NVIDIA was at 259. So there is a 32% upside, potential upside, if I were to buy the stock. Right? So of course, this doesn't mean what they say is going to come true, okay? And oftentimes they can be also wrong. So we still need to do our own homework. There's no 100%, all right? If there's 100%, they won't be analysts already, and I won't be here, right? So let's just use this as a guide, as a reference, but not as a gospel truth. Okay, so this number, I normally like to see double digit, preferably above 15%, higher the better. And likewise, if you look at the bottom right of the screen, you'll see the trend of the target price. And you can see that it's growing and it has gotten stable, even when the actual price has been dropping, right? Only increase in a recent 1 month or so. So these are the kinds of examples that of companies that I will put into my watch list for further investigation. Now, let me share with you one more example, and that is a brand that we all know. So that's Google, right? So Google's stock price chart, 1 year price chart is on the left. So you can see that is quite nicely going up, and then it has gotten some volatility in the last 6 months or so. Now, despite the price volatility, we can see that the EPS, the earnings per share, is green. In fact, it's 91%. That means the earnings of the share have grown by 91% in that year, that financial year 2021. And the revenue has grown by 41%. That's amazing growth for a company this big. All right. So I love this number. So then I go further to check out the analyst rating. And we have 41 analysts that are calling for a buy for Google. And based on their estimated target price, for comparing their current price to the average price, there is a 23% potential upside 12 months from now. So I like all these numbers that I see here, right? So, and on the trend basis, if you look at the target price, you can see that there is a slight uptick 2 months ago or 3 months ago for the target price. That means all these analysts, they have more analysts that have revised their opinion about the price of Google 12 months from the date that they have analyzed their report on the Google. So that's good for such a big company, right? And you will also notice that the stock price of Google did not go up. Instead, it go down. So this, to me, presents opportunity. All right. So I just shared with you 3 examples of stocks that I have put into my watch list that I will do further investigation on. Right. So you need to, when you first start, you need to build your own watch list. I'm just sharing with you some pointers that you can use to build yours. Let me continue. Now, what do I mean by do further investigation? We need to do homework, right? We cannot just say that, oh, because I hear from Richaard that Microsoft, Nvidia, and Google is good, so tonight I'm going to press buy. No, don't do that, all right? I'm not responsible for your profits nor losses, okay? And neither should you just take anybody else's word for it. You really, really need to do further homework. So at least you need to go to their website, go to their investor relations, take a look at their quarterly presentation slides or annual report if you are into the numbers. Develop a much more intimate relationship with this company that you plan to hold for long term. Now think of it like trying to court a girl and you have intention to, have marriage in mind, right? So surely you won't, I mean, I'm not saying surely, but most people will not ask a girl for marriage on the. So same thing for stocks. Take some time, go on dates. You may even want to follow the stock for a couple of months to understand it better, right? So to have an intimate relationship with the stock. Then when you are comfortable and say, yes, this is the lady I want to spend or man that I want to spend the rest of my life with, then okay, go ahead and buy. Okay, so do your homework. So when I put stocks into my watch list at the initial step, after I've done my homework, I will put them into what I call shopping lists. Okay, because when I'm watching, I may not buy, right? I'm just putting it there for further homework. But when I put into my shopping list, means that these are the ones that I'm going to buy already. So I'm just waiting for the right price. And that leads me to the next topic for today, okay, which is technical analysis. So up to this point, I hope I have shared with you some ideas on how I am using to build my personal watch list and also my personal shopping list. So the next area of the webinar is where I will share with you how I identify trends and turns in the stocks based on simple technical analysis. Okay, so for technical analysis, my favorite tool is a free tool called TradingView. So if you don't have an account, you can go there to open one. It's free and it's the best in my opinion. All right, so all the screenshots of the charts that you'll see from this point onwards are taken from TradingView. So how do I use TA, which is a short form for technical analysis, to identify trends and turns? Now, turns, what I meant is like the stock price will not go up forever in one straight line. They will always have move in waves. So all those waves where it turn up and down are what we normally call swing high and swing lows. So if we can identify the swing high and swing lows, then those serve as good reference points for entries and sometimes also for exits. And very importantly, you must know that TA does not work 100% of the time. It's just like predicting weather. It's not always accurate as well. So we cannot expect technical analysis to work 100% of the time. But if it doesn't work 100% of the time, does it mean that we don't look at it at all? Personally, I don't think so, right? It's just like when we go out of the house, does it mean that we don't consider the weather? I don't think so. I think we need to consider the weather. Perhaps not so much in Singapore, but in countries where there are 4 seasons, it's pretty important to know the weather. So here are the 4 indicators that I use. They are my favorites. So I use a lot more indicators than this, but for simplicity's sake, I'll just share with you these top 4 that I personally use. The first one is called the HA candles. HA stands for Heiken Aishi candles. The second one is SMA, stands for simple moving average. And I use the 50 period and the 200 period for my SMAs. The third one is MACD. It means moving average convergence divergence. And I just use the standard settings, but I remove the signal line. So the fourth one is called stochastic. And here I did a small modification to the settings. Normally it's 1433. I use 933 because I learned this from a very good friend of mine, Ian Low, who liked to use stochastic for all his stock investing. So credit to him. So you may be seeing these terms for these indicator names for the first time. Not to worry, you can always learn about them by going to school.stockcharts.com, or you can Google online. There are a lot of resources that talk about these 4 indicators. But how to put these 4 ingredients together to cook a yummy dish? Hopefully I'll share one dish with you. Now, the first one is called Heiken Aishi candles. On the left, you will see a chart of normal candle. Candle means the price movement for the day or for the week or for the hour. So one candle is one period. Okay, so in this case, on the left, you'll see the normal candle. On the right is a Heiken Aishi candle. Now, why do I like the Heiken Aishi candle? It's because I like to visually be clearer for the indicators to tell me the trend. So you can see it's a lot easier to tell the trend from the Heiken Aishi candle. Now on the TradingView platform, you can click on the icon where I have circled in red box, then you can choose the Heiken Aishi candle and you will turn your normal candle chart into a Heiken Aishi chart. So to me, green means up, red means down. It's as simple as that. If I look at the left chart, it's not so straightforward. So that's why I use Heiken Aishi candle. Now, for the simple moving average, I use 50 period and 200 period. So why these 2 numbers? Because these are the most widely watched numbers by the world. So that it could have, because so many people watch it, there is this thing that could happen, this thing called self-fulfilling prophecy. So you hear people talking about, oh, the price is bouncing off the 50 moving average or the 200-day moving average. So we look at what the world look at, so that when and many of them will actually make decisions based on these 2 moving averages. So when we look at that, and we can almost guess what are the decisions they're going to make when the price move towards this moving average, 50 moving average or 200 moving average. The third indicator is moving average convergence divergence, or MACD for short. You can add these indicators to your chart by clicking on the indicator button on the TradingView platform. So you will see the orange line, that is the, moving average was the one before that, all right? So let me go back to this slide. So the orange line is the 50 period moving average, and the gray line is the 200-day moving average. Okay, so the calculations, I won't go into it here. You can check it out from the online resource. So the next indicator is the MACD, moving average convergence divergence, and it is the one, is the oscillator, the blue line that you see at the bottom section of the screen. Now, how to use it, I will explain it subsequently, right? So the calculations, again, please refer to the online resources. The fourth indicator that I use is a stochastic, and the settings I'm using is 933. So when you add this indicator to your chart, you can go to the settings and change the number to this set of numbers that you see. This is also a pretty common set of numbers that the world is using, right? And this stochastic oscillator is the last indicator at the bottommost of the screen. So I've just shared with you the tools or the ingredients that I use to cook this dish, right? So next is how to cook it, right? So before I go into that, I also like to touch on this topic called trend. Now, you may hear people talk about trend, but not often, you also need to know whether they're talking about short-term trend, mid-term trend, or long-term trend, so that we can be clear. Maybe today's trend is down, but this week's trend could be up, right? Or this week's trend could be up, but this month's trend could be down. So we need to know the time frame we're referring to. Just so that we know that we're on the same page, I'd like to give some definition to what I mean by trend. So this is my definition of trend. It is also commonly used by many technicians around the world. For long-term trend, I like to see the price above the 200-day SMA, and ideally, the SMA is sloping up. Later on, we'll look at the example, right? So for medium-term trend, I would like to look at the 50-day moving average, and if the price is moving up, the price is above the 50-day SMA, to me, that's the medium-term uptrend. And ideally, the SMA is also sloping up. And for short-term trend, I simply look at the HA candle color. If it's green, it's up. If it's red, it's down. It's as simple as that. Now, you may also commonly come across this term called golden cross. So golden cross is what happens when the 50-day SMA cross above or cross over 200-day SMA. And we will look at an example shortly. Now, this is for the definition of uptrend. For downtrend is the exact opposite, so I won't go into that. So now, let us use this illustration to have a small practice to tell what is the trend that we see. Now, I think the first obvious thing that we can see is that this orange line is the 50-day moving average. This is a daily chart. You can see from here D or 1D, that means daily. And this is of SPY, SPY. This is the ETF of the S&P 500. The gray line is the 200-day moving average. So just now I mentioned about golden cross is when 50-day cross above 200. So we see it here on this spot, it crossed above 200. So for the downtrend, actually there's a term for that as well. It's called the death cross. Okay, so that's when 50-day SMA cross below the 200-day SMA. So it happened here as well, pretty recently actually, right? So we have the golden cross and a death cross. So why is this important? To me, when a golden cross has happened, that means we are in the golden era of investing. Okay, so when we have a death cross that happened, to me, that's a dark era of stock investing. So got to be careful, right? The storm is coming, you see dark clouds. When we see a golden cross, sunny day, don't worry so much about umbrella, right? So if you see a death cross, dark clouds are there, so better bring an umbrella. All right, so we can see very clearly on the price chart, it kind of follow that pattern as well. So for the short-term trend, anywhere that you see the green candle, to me, that's a short-term uptrend. So what's happening here on this price? At the right edge of the screen, you see it is in green, correct? At the point where I took this screenshot. So that means short-term is uptrend. Okay, so whenever we see red, it's short-term downtrend. So when the price is above the 50 SMA, that means it's uptrend for the medium term. And then when it's above the 200-day is long-term uptrend. So we can see on this chart that I presented on the screen, the bulk of it is uptrend. And only small sections where there's a medium-term downtrend, but long-term uptrend where my cursor is right now. And we have just recently got a death cross, so we better bring our umbrella that there is a sign of life that we see from the price because short-term uptrend, mid-term also uptrend because it's above the 50, And for the long term, wow, it's standing right at the 200-day SMA. So I can't really tell. But if it's above it, then it's also long-term uptrend. But notice the slope, right? The slope of the 50-day SMA is pointing down. Ideally, we like to see it up. So this is not all is good, all right? So it's a slight downward point means that there is a slight bearishness, or what we call a slight downward bias to this SPY recently. Okay, so that's how we tell trend. So I hope that definition helps you to know, to tell the trend when you look at a chart next time. So if your friend asks you, hey, is the market up or down? Then you can tell them, let me take a look at the chart. And then you can, tell them, oh, it's short-term uptrend, mid-term downtrend, and long-term uptrend. Then I think they'll be very impressed with you. Next, we need to be able to tell the swing lows. And later on, I'll share with you how to tell the swing highs. And to me, there are 3 conditions that need to be satisfied simultaneously. Then I call it a swing low. And swing lows are points of the chart that you can, that I will consider to take an entry for the stock. So what are the 3 conditions? So that's where the other indicators are coming in. Okay, firstly, my favorite Heiken-Ashi candle. So the first condition that needs to be satisfied is that I'll need to see that the color of the HA candle has turned from red to green. That's the first sign of life that I like to see. That means short term, there is an uptrend already. So the 3 arrows that you see there are pointing to the recent uptrend in SPY. Okay, the color changed from red to green. You can also see other areas where the Heiken-Ashi candle has turned from red to green in this chart. For example, here, and also up here, and also here, right? So I just show you the most recent 3. So let me move on. The next indicator is MACD. So for MACD, I like to see that it is below 0. The MACD line, this blue line here, is below 0, right? This is the 0 line here. And I like to see that it's turning up. So the most recent 3 occurrences are here, where my arrow is pointing to. Although you can't really see clearly, but if you are on the TradingView platform, the numbers will be displayed here beside the MACD name. So you can see whether the numbers are increasing or becoming less negative in this case, right? So obviously these 3 points where my arrow is pointing, I have already checked that the MACD has turned up. Okay, so this is the second condition I like to see. Now, you may say that, oh, there are here, maybe the MACD line is also turning up, or even here is turning up. But if the MACD didn't go below 0, this condition is not satisfied because it has to be below 0. So that's the second condition. Now, the third condition is the stochastic. Now, the stochastic, I like to see that it goes below 20. There's a level here, 20, this blue line, dotted line, 20. The line above here is 80. Later, we'll be using it to identify the swing highs. So now we are looking at just swing lows. So first, I'd like to see that it has gone below 20. So how to know for sure? You can look at beside the indicator name on TradingView, you will see the reading wherever your cursor is pointing. So you'll see that it go below 20, and then after that, it go above 20. So that is the turn up. Okay, my friend Ian likes to call this a hook. Okay, so in these 3 cases, you'll see that there's a hook. Okay, so here, where my cursor is, you'll see that the stochastic has turned up, but it didn't go below 20. So I don't consider this to satisfy the condition. All right, so I've just shared with you the 3 conditions that I like to see to be true simultaneously. Then I will call it a swing low. So this is, now I've shared with you the ingredients. Now is how to put them together. So let's go to the kitchen, all right? So this is also where people will be talking about catching a falling knife. You may hear this, don't catch a falling knife. But the thing is that, we want to buy low, sell high, right? How do we know a low is low? Or how do we know that a low is low enough and won't go any lower? Frankly, I also don't know how to tell. For sure, for 100%. But what I do is that I use simple technical analysis, like what I'm sharing with you today, to help me have a better chance of identifying a low. Okay, so this in the next section, I'll share with you how I catch a falling knife. So this is again SPY, the S&P 500 ETF. And on the top in the title, you're going to see the condition that I like to see simultaneously satisfied. Then I'll call it a swing low, right? And this is on a daily chart. You can click on the letter D here to switch the chart to daily. So I want to see that the HA has turned from red to green. I like to see MACD below 0 and there is a turn up. I like to see the stochastic have gone below 20 and there's a turn up or hook. Okay, so on the chart here, I have already highlighted for you 3 instances of that happening. And you can see it here, the HA candle has turned green from red. If we look down, the MACD is clearly negative and is turning up. And then we can also clearly see that the stochastic have gone below 20 and is hooking up. Okay, so this to me is a swing low. This is the COVID crash. So if you manage to use this method and you apply it during the COVID crash period, then you might have taken an entry there. Now you may say that, oh, Richard, if you look a little further back, I see that the candle has turned green as well, right? And then the MACD has also gone below 0. But the thing is, and then the stochastic has hooked up. But when I hover my mouse in trading view over the MACD, I noticed that the value didn't turn up. So 2 of the conditions were met, but the 3rd condition is not met. So this is not a swing low by the definition, in the strict definition that I've mentioned. So thankfully, we didn't identify this as swing low because it would have gone down even further, right? Okay, so the same we can tell from this line in the middle. There's a faint green line here. The candle has turned green. The HA candle has turned green. MACD has gone below 0 and is turning up. And the stochastic have gone below 20 and turning up. So this is a swing low. And similarly, the 3rd one here. So all these on hindsight, you can see that they are potentially good areas that we can take an entry on SPY. Now, the same method that I just shared with you can be applied to any charts in any time frame. All right. So let us see what happens after that. So since the COVID crash and the 3 vertical lines where there is a swing low, moving on for the next 6 months or so, there isn't another swing low. So there's no more chance to get into the to buy SPY based on this definition, right? So how about if we move to recent time in the last couple of months? In fact, I just took this screenshot today. So this last candle that you see there is from last night. So in the most recent couple of months in 2022, can you spot where are the swing lows? Right? Okay, there's a hint there already. You see 2 vertical lines. So obviously, the green, red turned green for the Heiken Ashi candle. MACD is below 0 and turning up. The stochastic has gone below 20 and turning up. So here we have one swing low. Moving a little further back, same thing, we have another swing low. And there are no further swing lows behind. Okay, so here on this one, the one that my cursor is, although again, 2 conditions are met. The stochastic is below 20 and turn up. The candle is turned green from red, but MACD is above 0. So no, this is not a swing low. All right. So on hindsight, in the last couple of months, there were 2 potential points where we can take an entry on SPY. Okay. So I hope with these examples, I've given you enough illustration of how to identify a swing low on any chart. Okay. So the swing high is simply the reverse of the swing low. So I won't go into the exact details again. So here I've also used the SPY daily chart, and I've already marked out where are the swing highs. So these are the turns. These are the turns in the in the stock price for SPY, right? So if you can tell the trend and you can tell where are the potential turning points, now then can you ride the trend? Right? If you are a surfer and you go to the sea and you are trying to surf, surely you need to be able to identify when is the big wave coming or the small wave coming. I don't know what they call it, but because I'm not a surfer, but just you know what I mean, right? So same thing. It's not a guarantee that we can ride the wave in the direction that we want, but at least we can tell where are the potential turning points. It's like us driving. If we are driving in a straight highway, we don't really have to care about traffic light. But when we're driving in the city, every of these swing low and swing high is approaching a traffic junction. So you may want to slow down, pay more attention whenever such swing highs and swing low happen. All right. So with that, I hope I've shared with you what is the trend, swing high and swing lows to identify market turn. So what I've just shared with you is more of a medium term. We are probably looking at holding the company stock for months, okay, because swing high and swing low don't happen that often, weeks to months. But if we want to hold for long term, we want to hold for years, then how can we modify what you have just learned to do those, to apply onto stocks that you want to hold for years, decades maybe, right? So very simply, you just have to flip the time frame from a weekly chart to from a daily chart to a weekly chart. That's all you need to do, right? So all the conditions remain exactly the same. And if you want, you can loosen the criteria to use the Heikin-Ashi candle and MACD or stochastic. If either one of those are satisfied, that is considered a swing low. So this is the only condition that you may want to consider loosening, because to have all three stars aligned, very, very rare. All right. So let me show you an example. Now let us look at Microsoft, right? So this is a Microsoft weekly chart. So how do you know it's weekly chart? If you look at TradingView, you will see a 1W, that means weekly. And this is for the last 3 years. Yep, about 3 years. And you can see where are the swing lows. I've already cut short the time to mark them out for you. So in the last 3 years, there were only 3 swing lows. So you literally is holding the stock. There were only 3 potential opportunities for me to buy Microsoft. And if you look at the right side of the chart, well, we just had 2 swing lows. So okay, I've already acted on it. So so you can do your own due diligence here. All right. So that's for swing low. So next section inside the TA is to talk about where are my potential exits? When do we want to get out of a stock, right? Because previously we're using swing low as potential entry points and potential points where we can add more to a position. But when do I want to get out? Okay. Usually for long-term investing, we are not looking at TA or technical analysis for exits. We normally will only exit if we feel that a company fundamental has worsened, right? So for example, their earnings are going down, or suddenly there was a ban on their products, so things like this, something terrible has happened to the company. Or we may want to exit a position if we find a better candidate for the use of the fund, right? So you may want to take the least performing stock in your portfolio, exit it, and reallocate the fund to a potentially better performing candidate. So that's the second reason why I would exit a stock. And the third reason is for rebalancing purposes. So for example, if let's say I was holding on to 3 stocks at the beginning of last year, each one having 1/3 of my funds, and at the end of last year, one of them outperformed the other 2, and it now occupy probably maybe 50% of my portfolio. Then I don't want, then that might be an over allocation to that stock. So in the new year, I may sell some of those stocks for the one that have grown to occupy 50% of my portfolio, and I will use the funds that I've gotten, the proceeds that I've gotten, to allocate them into the other 2 stocks that I own, or a new candidate that I've identified. I'll keep it as cash to wait for the next entry point. Okay, so these will be the reasons that I would use to exit my positions. Now, if you want to know how a technician will exit a position, I'll just quickly go through 3 possible ideas. So they are trail by dollar or percentage. Trail means that every day or every week, you will want to go, let's say you don't want to lose more than 20%. Okay, so you will have an mark out a line on the chart, 20% away from that bar's closing price. And then as the price closes and moving up, you will move your line up as well. So that is your stop loss line. Okay, so that line can only move up, cannot move down. So at some point, you move to a point where the price have come down and hit your line that you drew, that you've been trailing all this time, whether by percentage or dollar value, then that is the time that you need to cut loss. Okay, so that's one. That's the first one, trail by dollar or percentage. Now but that one have to trail every bar, so it's quite taxing. So if you are a little bit lazy or want to be a bit more hands-off, then what you can do is to trail by distance away from the Heiken Aishi candle swings. So it can be swing high or swing low, up to you. So if let's say we use a 20% to start off right from here, then I will only shift my stop loss whenever there's a swing low, then I'll shift to that percentage, maybe here. So when you have mark another shift, I'll move up again. So I will only need to do the shifting whenever there's a swing low. I can also move a measure from the swing high if I want to. So these are just some examples for you. Now, the third way is to move to break even. Now, Warren Buffett have 2 rules of investing, right? Number 1, don't lose money. Number 2, don't forget rule number 1. So there's no such thing as don't lose money. Even he lost money, but doesn't matter. But how do we apply that principle? Now, let's say when you start a position here, or I start a position here, right? So I have a 20% mark that I mark off and say, okay, I don't want to lose more than 20% of my investment. Okay, so as the price move up, let's say move up by 10% or 20%, then I will shift my stop to my entry price. So what does that mean? And after that, I don't shift anymore already. Okay, so once I do that, this position becomes risk-free for me, because if ever the price come back down and go to touch my entry price, I will exit. So these are the 3 ways that we could use technical analysis to exit a position. But like I say, stock investing is usually not exiting based on technical analysis, but it's up to you, right? Now, I've completed the second section of my, let me see the time. Wow, almost 8 o'clock. My goodness. Okay, so I've come to the last section that I would like to share, which is how to build a diversified portfolio. So here, what I do firstly is to never to put all your eggs into one basket. Okay, so don't put all your funds into one stock or one portfolio. You must always diversify. Okay, so how do we do that? Firstly, we can diversify by deploying our funds to either the DIY way of growing our portfolio, or the DFY way of growing our portfolio. DIY means do it yourself, where you have to make all the decisions yourself. Done for you is where you outsource it to some service providers like Syfe Wealth to let them handle your wealth portfolios for you. All right. So today we are talking about DIY. So I'll skip this slide. So let's say that you have 5 strategies that you like to, you have $100,000 that you want to invest into a group of strategies. Okay, so what you need to do is that you need to decide what is the allocation that you want to use per strategy. So in this case, it's a DIY long-term investing. So let's say we want to divide them equally to 5 strategies. So then that is what we can do by dividing by 5. Okay, so secondly, you need to decide the number of stocks that you want to hold in your portfolio. Thirdly, you need to decide for each stock, do I enter all at one go, or do I enter in tranches? So for me, I like to enter in tranches. Okay, so coming back to this example, if I have 100,000, I want to invest into 5 strategies. So 100,000 is about 75,000 US, and I want to invest into 5 strategies. Each strategy will receive an allocation of $15,000. So I want to have 10 stocks in my portfolio to start off with, and for each stock, I want to enter in over 3 tranches. Okay, so to calculate what is the amount per tranche that we will I'll be using, it'll be the simple formula here: 15K divided by 10 stocks. That's 1,500 per stock, and then 1,500 per stock divided by 3. That means per time that I buy, it'll be $500, $500 US. Okay, so what if I have a small account? If let's say I've only got $10,000, then we just follow the same math. Okay, so everything just divide by 10. So that means that per tranche, I will only use $50 instead of $500. If you have $1 million, then you just multiply accordingly. Okay, so that's how we can build a diversified portfolio. First, by deciding on what is the tranche amount that we will be using to enter each buy order. Okay, so the last section here is fractional shares. Now, this is a very powerful feature that I really, really love, because this allows me to more precisely, more efficiently allocate my capital. Let me explain what I mean by that. Let's say that I want to Let's say the tranche is $500. Okay, so and I want to buy these 3 stocks: Apple, Berkshire Hathaway, which is Warren Buffett's company, and Google. So Apple's share price at the time where I took this screenshot was $170 per share, right? So if I want to allocate $500 to this stock, I will need, how many shares can I buy? So the answer is 2.94 shares, okay? So, but we know we cannot buy a decimal point in shares normally. So we have to buy 2 shares, we round down. So that means that out of the $500 budget for the tranche, I only deployed $340, and $160 is not used. That's what I call the slack. This is the inefficiency if we do not have fractional shares to help us. So for Berkshire Hathaway, the stock price was 348, and if we divide into 500, we need to buy 1.43 shares. So we need to round down. So therefore, we only buy 1 share, and that means that we only utilize $348 out of the $500 of budget, and we have a slack or inefficiency of $152. And for Google, the stock price is $2,765. We can't even buy any share because when we divide into 500, it's 0.18. So we can't buy any shares. So the entire $500 is unutilized. So these are what I call slack. Okay, this is very inefficient. So we cannot ride the growth of Google if we don't have fractional shares. So how can fractional shares help us? So using the same example, we use a new division. So now for Apple, share price $170, we divide into 500, we need to buy 2.94 shares. And with fractional shares, with a broker that offers fractional shares, we can buy exactly 2.54 shares. And that means that our $500 budget is efficiently utilized and we have 0 slack. Similarly, for Berkshire, the share price is 348. We need to buy 1.43 shares. And that means that $500 is used with 0 slack. And for Google, we can buy Google now. We can buy 0.18. You want to buy 0.01, I think that's also possible. All right. So we can buy $500 worth of Google with 0 slack. So this, to me, is a very powerful feature that we should look out for in a broker that can help us to more efficiently deploy our funds. Okay, so that is the topic on fractional shares. So if you have a small account, if I have a small account, then yeah, with a $50 per tranche, you can see, you know, if a broker doesn't offer me fractional shares, then I can't buy anything at all. I can't even start building my portfolio. That's terrible, you know. So by investing, we want to invest for long term. We want to start even if it's a small account. So with fractional shares, we can do it. We can buy all these fractions that you see on the screen, even starting with just $50 per position. Okay, so to recap, I've just shared with you in this last hour how I build my watch list and shopping list, how I use technical analysis to identify trends and turns, and how I use fractional shares to build a diversified portfolio. If you're watching this on YouTube, eventually when it's recorded, please don't forget to like, subscribe, and share the video. And if you are watching this live, thank you for staying with me all this time. And not to worry if you miss any part or want to revisit any part, because I believe Syfe has recorded and will be uploading it to YouTube. And with that, I'd like to just call for one more time that if you have just joined us, please consider joining my Telegram channel, where I'll share moving forward, maybe some of these ideas that I see in the market, as well as other education and opportunities for wealth building. So just search for Wealth and Joy in Telegram. And with that, I thank you for your time, and I'd like to hand over to Samantha to share more about Syfe Trade with you.
Thank you very much, Richard. That was extremely informative. I think both Grace and I also learned a lot there. We want to take a few questions. We've got a lot of questions in, so we're going to take as many questions as we can. I know we've gone over a little bit, but bear with us. But first of all, I just want to take you through a few features of Syfe Trade, where a few of the functions and features that Richard was referring to can be executed with, particularly around the fractional trading, etc., and the analysis portion that he was showcasing and using as an example in his presentation. So what is Syfe Trade? So essentially, we have used what the features and the user interface that everybody has loved from Syfe Wealth to build our brokerage platform. So a very simplified user interface and experience. You can gain access to real-time market data and news from Dow Jones, as well as analysis, which showcases, as Richaard featured, some of the top movers in terms of Wall Street analyst ratings and recommendations from the experts themselves. One of the other key features is that we have very low and transparent pricing. We offer free trades for all customers, and essentially, very importantly, no account minimums, no inactivity fees, no platform fees and custody fees, etc. So all the fees that you see are essentially, what you get. Essentially, what Richaard talked about was also the aspect of fractional trading. So a couple of very important points to call out here. So we offer fractional trading on our platform, which is a very rare feature actually in the brokerage among brokerage platforms in Singapore. And not only can this allow diversification that Richaard talked about, and an optimal allocation of your portfolio, but also enables you to buy and essentially access a lot of stocks and companies that you wouldn't be able to if you were buying on a per share basis. So Richaard mentioned Google as that is a cost of $2,800 almost for one stock. Another popular one would be Amazon, right, which is priced at above $3,000. So with as little as $1, we say, but maybe more realistically $10 or $50 or $100, you can actually buy any of those stocks and participate in the trends that we're seeing in those companies. One other important aspect is we really value all of our users, safety and security. And so all of our accounts on Syfe Trade do have individual account insurance for up to $500,000 US. And as I mentioned, that we also provide real-time stock quotes and also news feeds. So this is a pretty important feature that we like to talk about, because it has essentially news from Dow Jones, very trusted news sources that you are basically not able to get on a, free basis from if you were to go on the internet, etc. And we offer this for all users, no subscription essentially required. So in terms of pricing, as I mentioned, it's a flat pricing structure. There is no other fees that are hidden here. And essentially, we have an introductory offer where we have 5 free trades for everybody per month for the first 3 months. So, for instance, if you join in April, you will get April 5 free trades. And then you also get 5 free trades actually for the 3 months subsequent to that. So May, June, and July. And also after your 5 free trades, so your 6th trade and beyond, you will be paying a price of 99 cents per trade. Subsequent to that, we will still have free trades. You will have 2 free trades per month, and then $1.49 per trade subsequent to that. So on your 3rd trade and beyond. One very important and very exciting feature that we've just actually released is fully extended trading hours. So essentially now you can trade on the platform anywhere from 4 p.m. Singapore time to 8 a.m. And that is, so you can have basically access to the markets, not just over our evening, which can be quite taxing for a lot of people with markets normally opening, U.S. markets normally opening at 9:30 p.m. and then closing at 4 a.m. So now I think we'd like to take some questions. I see a lot of questions coming through. I know we have a limited time, but let's get started.
Okay, so my first question is for Richaard, right? So for long-term investing, you mentioned that out of the 3 conditions, we can relax one of the 2, so MACD or just stochastic condition. So how would, for someone who's starting, how would they know which one to relax? Sort of would you have some insights about that? And or something that sort of comes with experience, or after you've watched the stock for some time?
Either one is fine, actually. So it's not a hard and fast rule. Those technical indicators, because of the way that they are calculated in their formulas, they are meant to identify swings already. So it's whether the swing is the deep enough swing or not. So I use the end condition so that it's a stricter condition. I want both to tell me that they are in a deeper swing low. Then I give it then I call it a swing low. So, but for long term, let's say you use weekly chart, chances of that happening at the same time is very rare. So that also means that if they do both happen at the same time, means that it's a very rare opportunity. All right. So otherwise, use either one is fine.
Okay. Yeah. Cool. Thank you. Yeah, and then also I think more of a sort of logistical question, right? So before we had trading hour, what time? Because given like when the market opens, it's we're not really sure what's the trend going or what sort of the sentiment there. Do you end up before we had some trading hours? Do you end up sort of staying up a little later to see how things are, or kind of like could you share a bit about the timing of that?
For long-term investing, it doesn't matter what time you buy. You can, in fact, buy anytime because it's long-term, right? So the movement within a day doesn't matter at all. But of course, if you're doing short-term trading, intraday trading, then it matters. But for long-term, doesn't matter. So buy anytime convenient to you. So the market open either 9:30 or 10:30. You can just buy whenever the market opens.
Okay, great. Thank you. So my next question is for both, but perhaps a bit more towards Sam. For people who have bought ETFs in their portfolio, right? What's the additional benefit of getting individual stocks?
Sure, and I think that's actually a very, very good question. So essentially, ETFs are a combination of many different stocks, right? Depending on which ETF you buy. But as we say, ETFs are a very helpful tool for perhaps more passive investing. And if you want to take a longer term diversified view in a more simplistic way. But if you have high conviction on a particular stock, whether it's through fundamental analysis, technical analysis, because you like a company or a business, et cetera, and you think, as Richaard mentioned, that it's something you can't see us living without, and you want to have maybe a more concentrated position in a particular company, then that's where you can supplement your portfolio with some exposures to particular stocks.
Okay, yeah, thank you, Richaard. Do you have anything else that you want to add?
Nope.
Okay, yeah, great. So the next one is, in your opinion, is fundamental or technical analysis more important, and why?
Both are very important. For long-term investing, the fundamentals will normally tell you about a business, right? So when you're buying a stock, we're not just buying a number, we're not just buying a paper, we are investing into a company. Company are run by people, they have to generate revenue. So we have to consider the fundamental for that reason, okay? So for technical, it is reading the tea leaves, right? Trying to pick the lows or the highs, the swing lows and swing highs to bargain with the market a little bit when you take your entries. Yeah, so to me, both are equally important.
Okay, yes, that covers what you were going to say too.
Yes, I agree. I think it really depends on your own investment style, and that's something that you have to play around with and figure out, as you grow as an investor, right? What makes the most sense for you.
Okay. Yeah, I think the next one is what is the key difference of purchasing ETFs via Syfe, via the broker platform versus like a broker platform with zero purchase fees?
I think that's that kind of maybe talks to the features that we talked about, right? So there's many other things that are available on the platform, apart from obviously, low fees. So for instance, fractionalization is one of them, right? Where you want to optimize your portfolio and not have to buy a specific unit of a stock, or in this case, an ETF, right? Whether you want more access to news analysis, user interface, etc. So many other things I think we mentioned previously.
Okay, and then one is more, I guess, sort of how do you, when you have your three tranches, right? Like Richaard mentioned, and then when you think about using technical analysis for entry, and then you also have that, versus DCA. Yeah, what are your thoughts there?
DCA. Now, if you have zero knowledge of technical analysis and you want to invest in the market, then DCA, at least you are in the market, right? And you don't have to time it. But if you are willing to learn, then introducing TA can help you to optimize your entry levels. Okay, so, and nothing is stopping you to do both as well, right? So yeah, I think it's complementary.
Okay. Yeah, I think that's most of the questions we have. We got a lot of questions about whether this will be shared, afterwards, and like where to find it. So to answer that, yes, this recording will be available on Syfe's YouTube channel. So if you need to, go over the section a bit more closely afterwards on your own time, you can once the recording has been posted. Yeah, and with that, just I'd like to thank everyone for spending the evening with us to learn technical analysis with Richaard. I know, like Sam and I also feel like we've learned a lot. And thank you, Richaard, for joining us and taking the time to prepare the slides as well as make it really educational and informative for everyone.
Thanks for having me.
Thanks very much, Richaard. I think you might have to have a follow-up session because there was a lot of questions in there. A lot of questions in there still. So hopefully we can have you back again soon. But thanks again for your time.
No
and thank
problem.
you everybody for watching today.
My pleasure.